And the dailies, here we go on the dollar, unfair highs at around, let me just see where we're at on that, 101.78. So, what do you do with the dollar? I actually a little bit more short-minded here. 180 would be a target down there. Right now, at this moment, you've got a great place to pick a battle, in my opinion, on the short side. If the dollar comes off, you guys know what happens to commodities in general in a default manner. So that's kind of the way I'm looking at the dollar right now. Maybe exploring the fair auction, not a massive short opportunity to back the truck up situation, but just an opportunity with a really good risk reward of about 100 pips on the dollar and stops relatively tight above. Okay, I think we've got Steve. Steve, are you there?
I'm here, if you are there, John.
Yeah, I'm always here. How are you this morning?
Well, I'm in Raleigh, North Carolina, in your area of the woods, so it's beautiful. Doesn't get any better.
It's good to have you down here, man.
I know.
So Steve's been here for a couple of days and on site here, and what we want to do today is just try to do the rest of the show talking about some topics that we had thought would be interesting to cover earlier. And Steve, what is on your mind this morning?
Well, I think the big one for today to watch out is what healthcare stocks are going to do, just because we had the release of the Republican version of the Obamacare repeal come down the pipeline. So presumably, healthcare stocks going to react to it in one way or the other. I mean, they might not, right, but at least it bears watching for the day.
Right. What some of the healthcare stocks? I don't have our scanner up right now. I'm going to get it up after the break. But some of the healthcare stocks.
I mean, there's a healthcare ETF. The symbol kind of
XLV.
Yes, slipped my mind. So I think that one bears watching. Then, of course, individual healthcare stocks too, right? Right.
So I don't know if you're showing my screen, but technically, I mean, we've really had a move here, huh? So right now, technically speaking, and you may be seeing this on TFNN, you may not be seeing it, Steve. 75.93 unfair highs, and then you've got 73.88 below. We don't have to kind of back and fill all the way down there. And again, where this? Let me just see if we got any prints this morning. I don't see anything printing yet this morning on this ETF.
No.
So we'll have to see how this opens. But did you have any chances to look into the details of that of what you just talked about earlier?
Well, I mean, I briefly glanced at it, right? I think the big one is going to be that rather than getting direct contributions and relief, everybody, depending upon age, will basically receive a tax credit, and then depending upon income, of course, but will receive a tax credit. And the tax credit can actually be factored, meaning that you can get it prepaid, so that you don't have to wait for the actual tax return to claim it, which effectively, I think, comes onto the same numbers numerically. I mean, at least in the ballpark, than what we have right now. But I mean, obviously, healthcare stocks have had a pretty good run. I mean, they ran a good 10% over the past months, give or take it. And
do you sell the news here? I mean,
you might. If it doesn't break into new highs, you certainly have something to sell up here, right? Because you know exactly where the historical high is. I mean, 75.90, 76. I mean, that's your point.
Right. I don't see this printing on my screen, but Tom said that UNH, like United Healthcare's bid up about $2 from yesterday's close right now.
Okay. So
the S&Ps, the S&Ps are down 4. So, I mean, there's something going on there. And the XLV, I just want to restate some numbers to you, Steve. We're breaking out again above. If this kind of develops in a UNH type way, breaking out above 75.93, 76 is, again, kind of breaking out of a profile again. But if we don't do that, you think it might be time to sell the news kind of situation on this? I'm actually thinking yes, myself. This thing's had a heck of a run.
It did. I mean, just hearing from Tom, because I don't have my home screen up, so I'm a little blind right now. But just
Right.
hearing from Tom that Humana is up $2 would indicate to me that the market's going to blow to the upside.
Right.
So you might have a situation where either the thing is going to go up or it reverses down intraday. If it then closes below 75.90, the old historical high, you really have a sell right there.
Yeah, I agree with that. Might be kind of a wait and see situation.
Yeah.
Let somebody else figure out the top. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And we've got Steve Benger with us, I'm assuming, still. Steve, you there?
I'm alive and kicking, yes.
Great. It's good to know that. So we were finishing up XLV, and really let me pull up the weekly here. Really the mindset of this trade, even this thing's had a heck of a run. If we don't, really kind of follow through and close above 75.93, Steve, and maybe even reverse back down below it, then you might have, with all the great news out there and the action that kind of happened afterwards, that would be a kind of a strong signal for a possible pullback in this ETF, correct?
Yes, I would agree. I mean, if the market pops higher, and then can't hold the gains and actually closes below the historical high, the 75.90, to me that would be a sell.
Yeah, there's a lot of what ifs in that conversation we just had, but that's the way trading is. You're looking for setups like this, and if that setup doesn't happen the way we just talked about it, go ahead, Steve.
Yes, you're right. Right. I mean, it's a game of perceptions and opportunities. So if it closes below 75.90 after a higher opening, I believe you have an opportunity.
Right. So let's look at a couple other things here. I've got to look at Target first, Steve. Yep, still down. We were gonna talk about your trifecta, and if you could expound on that a little bit, that would be awesome, and I'll try to fill in some holes.
Yes. So just because we talked about yesterday, and we are kind of like shooting it back and forth, I think what is important to realize is that we have kind of a trifecta of potential economic developments, which would be rather transformative for the U.S. economy and corporate earnings for potentially decades to come. I mean, I know this sounds like a big statement, but that's actually how I feel. And that trifecta of news or developments is specifically corporate tax reform, which would be a significant boost to earnings and consequently dividends, because dividend payouts would increase accordingly, which would push stocks higher on a long-term basis. The other thing is long-term regulatory relief by Trump saying you have to kill 2 regulations for every new regulation you introduce. And that over time will lead to a significant regulatory relief, not only for banks, and we talked about banks the last time, I'm still a fan of banks, but really for every business, which will ultimately extend down to mom and pop businesses, which are going to have it much easier. And then the 800-pound gorilla in the room, I think, is the border adjustment tax and what it will do to the U.S. economy.
Well, that being said, risk-reward scenarios, high reward opportunities, and the instruments that may offer those, got any thoughts on how to take advantage of what you just said?
Well, I'm still a fan of the banks. I think the banks are the ones who stand to benefit the most from an uptick in interest rates and from regulatory relief. And vis-a-vis where they are in their valuations, I think the banks have a lot of runway ahead of them. Retailers still, I think, are vulnerable even at those levels. Wow. In particular, when the border adjustment tax hits, because at least initially, it's going to make things a little bit more expensive, which should theoretically be a drag on consumption, which would then be bad for retailers.
Got it. And, I'm looking at the 30-year right now. I don't know if you see my screen on, I don't know if you're able to access the TFNN show over there on your terminal. By the way, I'm in the background of Steve, if anybody can see that. The 30-year, the other day we talked about, this thing coming down to Custer's last stance here around 148.29. It did a little bit of a empathetic bounce off that area and caught this 149.29, which was literally the unfair low of the daily to the tick. Actually reached 149.30, and now we've kind of settled back again. So the action on the 30-year, pretty much in the 10 years, to kind of race down to these unfair lows on the weekly profiles, and actually now consolidate and hang around there. And this is kind of a possible continuation kind of feel here to it. And that widening yield curve, like you said, the banks are kind of looking for that. Have they already priced a lot of this in, or do you think every time, if we have a break in treasuries, the banks are just going to fly again?
I wouldn't necessarily tie it like on a one-to-one basis to the treasuries. I think it's more like a general scenario whereby banks, I feel, should be bought on weakness vis-a-vis everything which is going on in the market. But theoretically, the net interest margin for banks is going to increase from here on out. And since the net interest margin is on some level defined what was gone in the treasury market, yes, the moment treasuries dip in price, theoretically banks should go up. I mean, might not be 1-to-1, but yeah, I mean that's the theory here.
Right. And where does, in your mind, I'm pulling up gold here right now. You know, gold kind of broke and closed last week below this 1236 area. That was a really good, had a nice little bounce there. And then, you know, you got to be able to take your medicine and kind of walk away from a trade once we have a stake in the ground, especially on the long term, a technical change here. So we've closed last week below 1236. We went back this week and kind of touched it. Just kind of rallying back up to that former support, now resistance. We rallied up this week to 1237, so 1236 support, broken, closed below, go back and touch. And this is one of those kind of dive into the profile trades that you like. Now that has happened, I like them too, by the way, Steve. now that that's happened, you know, does gold, you know, continue to drift here downward, or do you just kind of pass on the short now and just try to still wait for long opportunities? I mean, I'm kind of mixed up here, to be honest with you.
So last weekend when I was on, I think it was on the 28th of February, so about a week ago, we had a caller on the show, and we were talking a little bit about gold. And what the caller basically pointed out, and I'm paraphrasing now, was that he said, well, why is gold going up? Well, the dollar is getting stronger, and we are in an environment where gold should be getting weaker, because with interest rates rising, at least on the surface, that should be bad news for gold. And nevertheless, over the past 2.5 months, gold has consistently been going up, and we are now a solid, let's say, 10% or so from the lows we had 3 months ago. And gold is a tricky animal right now, I feel, because
I don't see any edge.
Well, I mean, it almost signals like inflation's around the corner, and despite interest rates coming down the pipeline, gold is strong. So it will be really interesting to see how gold is going to react to the next interest rate hike. It should go down, but I have that strong suspicion that actually may bottom out with the hike and then go higher. That's what looks to me.
All right, guys. Well, I'll tell you what, we're going to pick this up when we come back after break. Stay tuned.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, Trade HEGE or HEGJ, 2 times currency hedged, leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And we've got Steve Benger with us all hour here. He's down in North Carolina with me today. Steve, I wanted to kind of revisit something you said earlier, which I haven't really yet figured out what's the trade on this, or the ramifications either way. But you mentioned something about a border tax and that being somewhat of the 800-pound gorilla in the room. And you actually had some positive feelings on that, I thought, earlier. But I'd love for you to just kind of talk about that, because I think that's gonna be something that people are looking at significantly, especially when it comes to corporations and how that kind of revolves around those guys. So
Yes. So just to recap, the border adjustment tax is a tax which Trump wants to charge on the border on imports into the United States. And what is important to realize in that context is that pretty much every OECD country but the US has a value-added tax, which we do not have. And a value-added tax...
That's amazing. If somebody's ever been over... I mean, you've been all over the place, Steve. I mean, like, if I go to Costa Rica and try to buy a car there, it's like 40% more, the same car. And we just don't have those barriers coming into this country at all. And unless you've traveled, you really can't really get your head wrapped around that. And, even in the Philippines, it's borderline kind of third worldish in a lot of places. And, but then when you go to try to buy something made in the United States, like they don't allow you to order anything off Amazon there. You know what I mean? Because they can't control it like they want to and whack people hard enough. So, go ahead. Sorry. Just wanted to throw that in.
Yeah. No, that's right. I mean, you are kind of like making the point. So pretty much every OECD country but the US, I think there's one other country, but which one is kind of like escapes me right now, charges a value-added tax. Obviously, the US doesn't for a lot of reasons, but the net effect of a value-added tax is that if I want to import goods into another country, that country will make my goods by about 15 or 20% more expensive at the point of entry. And the importer of the goods has the ability to reclaim that VAT when he sells it to consumer. So because of the way the VAT works is that it effectively makes the import of American goods by the amount of the VAT more expensive, whereas when a local company in that foreign country is able to resell those goods, they're able to reclaim the money. So what happens because of it is are two things. First of all, the American corporation, which does not have an office or a subsidiary in another country, is unable to reclaim that VAT amount. So it's being paid, it decreases profit margins, and it just makes the goods more expensive. Because of it, two things happen. First of all, the American company is not as competitive because of the VAT as it should be. And if the American company has significant business interests in that other country, it will reach that point where they say, okay, we have to set up an actual subsidiary in that country to take advantage of the VAT. And because of it, that whole thing plays into exactly what Trump has been saying all along. And I mean, you can argue with him for whatever reason, but he is right.
Well, he's a business guy. He lives and breathes this on a daily basis because he's got international, deals going on.
You're right. So what he's putting the finger on is are those two things. He says, first of all, because we don't have a VAT, we're going to lose jobs to those countries because American corporations are effectively being forced to set up subsidiaries overseas so that they circumvent the VAT tax disadvantage.
Right.
And we are suppressing our imports because a lot of companies are just not competitive on the international market. And the border adjustment tax would kind of eliminate all of those issues because it would function as a VAT, but just on the outside to the rest of the world, because for political reasons you cannot institute a VAT on any reasonable level within the United States to level the playing field. So he's saying, okay, we are not going to do a VAT, we're going to do a border adjustment tax to kind of like kill both birds with one stone. And if he gets that done, I think the ramifications to the U.S. economy long term are going to be huge. It will really put a cramp into anybody wanting to export jobs overseas, and it's going to make our exports much more competitive. And that would be a huge thing, long term.
What about service companies? Not just somebody manufacturing, but like, what are your thoughts on service type deals? For instance, call centers or whatever,
Yeah, services are usually excluded from the VAT, right? It's consumption.
Got it. Yeah. Good. I was just notified that we're getting so excited that your camera's shaking over there. I think that you were pounding the desk about what you were saying earlier. So they said, "Hey, tell Steve to stop getting so excited over there." But it is something exciting. These are like sea change events going on that should have already happened, that a real business guy, and again, Trump's got his positives and negatives, everybody's got that, but that's a whole nother show. But, if a guy that runs a business gets in there, and, the biggest problem with our debt, in my opinion, and everybody listening to this show probably feels the same way, it's just our country's really not run optimally, as far as plugging holes like you're talking about with this one, normalizing some things. And actually, I'm sure that at some point, people in the government are going to really be held accountable for their own departments and, waste and spending and things like that. And, all these things kind of make our debt. The only thing I don't think that, Trump kind of ran on our unemployment figures. Like, what do you feel about this? This is a good question for you. Our unemployment figures are bogus, basically. It's totally calculated wrong. If you really want to know what true unemployment is or full unemployment or things like that, do you think that now that's such a scary number to kind of uncover? Do you think that he'll kind of leave that alone because it'll be too much of a shock? Or do you think if he readjusts a number like that to what it, mathematically truly is, that everybody already kind of knows that and they'll just look at it as a different calculation to kind of bank off of in the future? Or what do you think about that?
So I guess you are alluding to the fact that he repeatedly stated that the real unemployment rate within the US of A is somewhere around, 25%.
Something like that, yes. And that's a little different than 5.
Yeah. Obviously, there are a lot of people who don't have a job, but I happen to have a lot of friends who don't have a job because they don't want a job.
Right.
And those people, I think, are part of the 25% Trump is quoting. And like in my case, I have a lot of friends who don't have to work as you have done, or at least not in a conventional manner. So they are part of the 25%. But I don't even know where to start with that. The yardstick has to be the same. A yard has to be a yard. We can't just arbitrarily change things. That's the point.
Right. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And it's good here. Stay away from my laptop.
Hi, guys. Welcome back. We've got Steve Benger on site here in North Carolina. Steve, one of the things that great, discourse on the border tax situation, but as a trader, everybody listening to this show is like, well, how do I make money off of that? Sure. So, instead of trying to get long the U.S. markets or all these adjustments that are going to happen corporately, that's a big deal. And do you just go in and take select overseas markets that are going to be completely affected by that because you kind of feel like that's going to happen? Do you just short certain indices or try to find companies that you can kind of trade, in some broker networks, just kind of pick out some things that will be massively affected by this? And how do you make money off of it in your opinion?
So let's talk about the countries which are going to be mostly affected by the border adjustment tax if and when it comes. Okay. Number one is China. Our trade deficit with China is about $347 billion per year. Mm-hmm. And then number 2, 3, and 4 are Japan, Germany, and Mexico. And all of the last 3 ones are about like the $64, $65 billion mark. Mm-hmm. So the trade really is twofold. Either you're going to start selling stocks if and when the border adjustments tax is going to hit. And I think the Chinese market would be very subject to a correction if that is going to come through. or you sell currency.
I was going to ask about the currencies. Yeah.
Yeah, and I think the Chinese renminbi is not really free float. Germany is just part of the euro, so you're really trading a bigger basket there. So on the currency side, I think the Japanese yen would be the prime candidate to sell. So I think if you really want to say that
to get devalued, you mean?
Yes.
Right. Okay. Right.
So on the currency side, I think you want to trade the yen, and on the stock side, I think you have Japanese stocks and Chinese stocks to sell.
Right. Okay. So let's look at the yen right now. So the devaluation of the yen will be this particular chart going up, and I've got the JPY USD cross here on eSignal, and I wasn't so excited about buying the bounce here in the yen or the dollar. If you can notice, the yen really tested this number twice down below 111.67.68. Tested it great. That was kind of the back the truck up moment there, and then hit the POC in a wide profile. This is a great example of paying attention to POCs, the blue line, which is all in the scanner, by the way, and using that as a target-rich environment for long-term trade. So now it looks like we might want to retest that POC at 115 and some change up there, and we're kind of basing above these daily balanced areas. So, what Steve's saying, it's a long-term kind of view. You don't know when or if and when that would develop out, but these are things to keep in mind, and it might keep a bid in the yen just based on that kind of fear trade going on anyway, right, Steve? That you don't want. This could be one where it gaps up 1,000 pips all of a sudden, right?
Yeah, it's honestly, I believe, if the border adjustment tax comes in, moves from the potential to the likely, suddenly, I think you're going to see a very rapid adjustment in currencies.
Right. And therefore, the dollar would fly. I'm assuming in your mind.
That's the idea, right? That over time, currency is going to be revalued, so that the inflationary component, which the one-time adjustment in prices because of the border adjustment tax would bring, would be eliminated, because we're just going to get more for our dollars. So we have to spend less dollars in order to buy Japanese goods. But if you really think about it, right, does it make any sense that I can buy a BMW here in the US for less money than what it costs me in Germany?
Yeah, I was always trying to figure that out,
Right? So
so
simple, or it's so obvious, but so it would be huge. I'm not all for saying BMW should be 10% more expensive, but how is it that I can buy a BMW fully loaded for less money in the US after they assembled it in Germany, put it on a boat, ship it over, unload it, drive it to my dealership, than what I pay for the car in Germany?
It's crazy,
right?
Maybe it's a write-off. I'm just kidding.
Everything's a write-off nowadays.
Yeah, I had to figure that part out. Hey, I got to tell
master of that, actually.
I got to tell you, your argument is so compelling. I've watched the yen actually become devalued as you're speaking about this, and maybe you're moving the market right now. This is broadcast in quite a few places, so
we're together, John.
There's a feasting of bids out there. Actually, I'm looking at it. It's actually gone up, I think, like 5 or actually quite a few pips since you've been talking. Powerful speech there. Okay, so let's go. You're from Germany originally. You go back there quite often. The British pound, I know that that's kind of wrapped up in the euro, Germany, of course, but the British pound right now has kind of meandered back down into a precipice of bounce time or just kind of cave-in time, and a weekly close obviously is going to be pretty serious here for this product right now. But 121.45 weekly unfair lows, we're right there right now. Yeah. Do you think? What's happening here? And
the pound is a problem child. There's no question about it. I mean, it's self-inflicted because of their decision to leave the European Union. And things might get awfully complicated over there if and when Scotland is going to hold a referendum whether or not to leave the United Kingdom. So I don't see any scenario in which the pound can catch a bit. And any even short-term rally in the pound, I feel, should be sold. I don't think that currency is going to... I think the currency has further room to drop, to fall.
Wow. Well, we had a really smart person, John from Philadelphia, that really called a little bit of a bounce reversal on the pound down when I was concerned that it was going to do what you're talking about. It's about 2.5 months ago, and it actually caught a pretty good bounce for about 500 or 600 pips almost. But it kind of did that key reversal back in the box up there, like I don't know if you're seeing my screen right now, but did that kind of back in the box, went back and retested those for highs. I wasn't so sure about what was going to happen with the pound, so I was kind of passing on it. But coming back down to these lows, it's obviously at a precipice, like I said, of a possibility of a flush here again. So I would personally be hesitant on buying this again. I kind of missed the rally before, but I'm kind of feeling the same way you are. There's so many unknowns. Why would you take any shots on it right now?
Yep.
Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Got about 3 or 4 minutes here left. Steve Benger's been with us the whole hour. So, Steve, so I think we're both in agreement on the pound there. Let's take a look at the Chinese currency right now. And technically, you probably got a little delay on your screen.
I do.
Because I usually say a lot of weird things that they have to temper before they broadcast it live. They've put me specifically on a longer delay than everybody else. So here's what's going on with the CNY USD on a daily here. So all things considered, what you were saying before, you'd expect this thing to actually, the chart to rise, which would be the devaluation. Because at one point China would, oh, wow, you're going to do that? Okay, wow, we're going to do this. I mean,
well, I mean,
you know.
China's, first of all, China cannot really, it's not a free-floating currency, right?
Right. Right.
So you really have very limited ability to really benefit from anything in the Chinese renminbi to trade. So I don't really think there's a viable trade in there. But you're right. Yes, I mean China will have to revalue their currency potentially. But China has also been battling capital flows for quite some time now. A lot of money has fled their country over the past, let's say, 2 years. So they have to be considered, all those things. I mean, for Chinese, go ahead.
It seems like to me that just the impending possibility of all these currency gyrations, you know, when does that kind of start hitting home with, you know, guys that are people or institutions that are invested in U.S. companies? I mean, like, wouldn't there be a short-term like volatility spike at bare minimum just if this becomes even a real case scenario?
Yeah, absolutely. I think it's the so once again, I believe a lot of it depends on the border adjustment tax, because that is the singular event which would really upend trade flows or impair trade flows dramatically. So if the border adjustment tax moves from the realm of the possible to the likely, that is when you're going to see a move.
When do I mean, has there been any mention about when anything would even get introduced to Congress on that?
Yeah, I mean, so Ryan, Speaker of the House, has spoken out in favor of a border adjustment tax. Republican senators, for the most part, have not been so big fans of it. Trump is obviously a fan, so
yep.
I think the Senate has to be watched whether or not it can be pushed through. But the funny thing is, the border adjustment tax is good for the American, let's call it blue-collar worker.
Right.
So you might actually get a couple of Democrats to vote for it. So there's going to be one-time inflationary adjustment to the system when it gets instituted. But the benefits over time can be so huge that I think a couple of Democratic senators who would ordinarily not vote Republican on anything might actually go for it. Like blue states,
right.
Blue-collar states.
Especially the states that were completely lost in the election. You're right. You're right about that.
I mean, it's a big thing.
They got to try something new. They can't necessarily, you know, be the combative, congressman.
I'm telling you, well, honestly, if I would be in charge of a union and would listen to Trump talk about a border adjustment tax, that would be music in my ears. I would be all over that thing.
Steve, thanks for coming on the show today. Thanks for being down here. Great. Guys, stay tuned for Larry and the rest of the hosts on TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.